People ask me whether they should buy Tesla, Solana, Bitcoin, or whatever investment is currently trending when they don't even have £500 in savings. The thing is, most people are trying to invest like Warren Buffett while living month to month. If that's you, I'm going to use my 24 years of investing experience to help you find a way to invest that suits you as an individual, because there is a correct order to invest in. I'm going to show you 5 ways to invest, and the second one is my favorite way to invest by far. Chapter 1, invest in yourself first. The step everyone misses. Before you invest in the stock market, before you buy crypto, before you even think about passive income, here's the uncomfortable truth. If you're not investing in your skills, mindset, habits, and earning power first, the rest doesn't matter. People are trying to buy ETFs or go on higher risk with individual stocks while earning 30k a year and hating the job. Meanwhile, the best investment return you could possibly get or will get is increasing your income. Books, courses, coaching skills, side hustles. This is the only investment where the return can be infinite. Why? Because every pound you invest in yourself increases the amount of money you can invest later. Here's a little example. In 2010, I wasn't happy as an electrician, so I went back to college to get some more engineering qualifications. 2 years later, I was working offshore as an engineer, and my income actually doubled. This so far has been my best investment to date. Here's an example for you to maybe aim for. Raise your income by £5,000 per year if possible. If you invest that for 20 years and average 10% returns, you're talking £302,000. That's a huge amount of money because you invested in yourself and then invested in the market. Chapter 2, low cost index funds. Boring, but they'll make you a fortune. This, as I said at the start, is my favorite way to invest. Now that you're potentially earning more and thinking long term, let's talk about the investment people should start with, but almost nobody does. Low cost global index funds. They're boring. They're not sexy. You can't brag about them on Instagram or TikTok, but guess what? They're the closest thing we have to guaranteed wealth building. Here's why people avoid them. Because everyone wants to skip straight to picking the next Tesla or the next Crypto 100x. But it's the foundational stuff that actually builds wealth consistently over time. Why index funds first? They're diversified. They're tax efficient inside ISAs or SIPs. They compound quietly in the background. They protect you from being your own worst enemy. They don't require you to be some stock picking expert. Think of index funds as the foundation of your whole portfolio. Everything else you invest into later is optional. This is mandatory. Chapter 3, individual stocks. Now we get to having a bit of fun. The part you want to jump to first. But here's the brutal truth. Most people picking individual stocks are basically playing financial darts, blindfolded. People get excited about fancy ETFs and the latest stocks while ignoring the fundamentals that actually matter. Individual stocks can make you rich faster, yes, but you can also lose some or all of your money, like I did in 2011 when I lost our life savings, chasing quick, easy money with no research, no idea what I was actually doing. Since focusing on much needed financial education in 2018, 2019, I've actually done quite well with individual stocks, so I'm speaking from experience. Anyway, this stage comes after you've built a stable foundation with index funds, a diversified core portfolio, a long-term plan. Only then should you take a small slice, maybe 5 to 15% of your overall portfolio, and invest in specific companies you believe in. Here's how to pick stocks with confidence. Pick companies with real profits. Understand the business, not just the stock price. Hold for years, not days. Use an ISA to keep your gains tax-free. Don't be someone who buys random stocks because someone on TikTok told you to, or the lads at work told you to. Not the way to go. If any of this resonates, by the way, hit subscribe and I'll do my very best to help you build wealth with this channel. Chapter 4, crypto. Not for everyone, but I am very bullish and think it should be at least considered so investors can potentially beat inflation and increase their wealth. People love crypto investing because it feels like a cheat sheet, a cheat code to wealth. And yes, crypto has created more millionaires in the last decade than pretty much any other asset class. But you know what it has created even more of? People who bought the top. and many investors have lost big time. That is the nature of the beast. Here's the honest truth about crypto. It's volatile, it's emotional, it requires discipline. It can drop 50, maybe 60% in days, and it can also 10x in a bull cycle. Crypto does not belong at the start of your financial journey. It belongs here in the growth and innovation part, but only once you've put the work in initially, so you fully understand what you're actually investing into. You have an emergency fund, no high interest debt, a strong index fund foundation, long-term stability. Then and only then you pick whether Bitcoin, Ethereum, or a high conviction altcoin deserves a small percentage of your portfolio, your overall portfolio. Crypto can massively accelerate your wealth, but only if you're not gambling your mortgage on it and you fully understand it. As you can probably tell, I'm not a financial advisor, and nothing in this video should be taken as financial advice. Chapter 5, Income Producing Assets, where you buy your freedom. Now we get to the final stage, the stage where rich people stay rich. Income producing assets, rental property, dividend ETFs, cash flowing businesses, bonds in certain markets, infrastructure funds. This is the step where your money finally starts working harder than you do. Look, capital gains are awesome, no doubt about it, but cash flow is what gives you freedom. Why? Because monthly income reduces stress, increases flexibility, and creates options. You don't need to wait 20 years to sell high. You're getting paid every single month along the way. Here's the real secret. Your wealth accelerates the moment your investments start paying you. First you invest in money, then money invests back into you. Then one day you wake up and realize your investments now produce more income than your job. That is financial independence. And it all happens because you invested in the right order. Just to be honest, this isn't right for everyone. This is how I do it based on over 20 years of experience. And after reading hundreds of books about investing and learning from experts like Warren Buffett and Ray Dalio. First, you invest in yourself. And as I said earlier, this has been my best investment to date. Next, you invest in low-cost index funds. Next, I would go for individual stocks. Then I would go higher risk with crypto. And finally, income-producing assets like property. What about you? What's the order you would go with? Summary. Most people aren't broke because they earn too little. They're broke because they're investing in the wrong order. They're buying crypto before they've learned financial basics. They're buying stocks before they've built a foundation. They're dreaming about passive income but still carrying high interest debt. This isn't going to be you, not after today. But what after all of that, you're happy to invest in a certain order, you know how important low-cost index funds actually are, but you're not quite sure where to start, like what fund to buy. Well, if you see below, you'll find the link for my latest playlist. Basically, 5 10-minute videos that help you invest in the stock market with confidence. All I would say is to take some notes so you actually learn from the videos. Don't be like me at school and university where I humped and dumped and didn't learn pretty much anything.